what they're doing is they're getting out of G7 currencies because they know they're worthless. The only people who don't are the users of the currencies.
Ladies and gentlemen, Investor Talk is back with another von Greyerz interview, but today I welcome somebody else who has never been here with me before, Alasdair Macleod, who is an advisor to von Greyerz AG. Alasdair, I'm really pleased to welcome you for the first appearance at my channel. Good to see you.
I'm very pleased to be here, Jan. Thank you very much.
You are welcome. We have many interesting topics to discuss. Precious metals, interest, the yen. I think this will get out of control and more. But before we come to our program, please give us some clue about your background, especially with a connection to the precious metals.
Yeah, sure. I started as a stockbroker in the City of London in 1970. And I remember it was just the tail end of the Australian nickel boom. So I learned about commodity cycles, if you like, in that sense, and speculation. But the real test, I think, came after 1971 when America went off the Bretton Woods agreement, abandoned it in effect. They said it was suspended, but it's still suspended. What, 55 years later. Anyway, that really was a learning curve as to exactly what the role of gold is in the monetary world. And of course, at that time, the US Treasury was trying very hard to persuade us that gold was no longer part of the monetary system and that the dollar had taken over its role, if you like, as the money of last resort. But it was always a currency. And having gone through that experience and the inflations and so on that we saw in the 1970s, this has meant that I've always had an interest in the difference between money and credit, banking and so on. And I eventually became a director of a bank, an offshore bank, as it happens, in Guernsey. So my experience, if you like, has been not just broking, but also investment management, also corporate finance, and finally banking. So what I've recently done, really, and I say recently, over the last 20 odd years, is I've started writing about the problems that currencies have in particular, and trying to make people understand what the difference is between real legal money, which in Roman law, which is in all our common laws, is gold, possibly silver as a subsidiary role, and credit is always currencies where there is a counterparty risk. And if you worry about counterparty risk, then really you need to get out of credit and get into real money where there is no counterparty, so no counterparty risk. And it's a fascinating topic. It's a topic which so few people understand, and my mission is to try and get them to understand it. And my association with Egon really is because we're thinking exactly the same way. We understand the risks, if you like, that currencies in particular face. And this is something which is really beginning to get very, very serious now. And I can see that we're coming to the end of the fiat currency system. So the implications of that are that measured in declining fiat currencies, as you know, your grandfathers would know, with Reichsmarks, gold is going to go to what? As close to infinity as you like. But it's not gold going up. It's constant. Its purchasing power is relatively constant over periods of time. It's the value of the currency going down. And when people realize that, the currency is dead. It's doomed. That, I think, is where we're going. And I think it's desperately important to get people to understand this before it really bites them hard.
And it will, because, as you know, the majority is always wrong. But let's go to Japan, because I think something very interesting is going on there. There was, like Egon said for a while, a Maginot line, and the Maginot line is at 160, and it's just being broken.
That hardly surprises me, Jan, because we have a new prime minister, and the first thing that she's done is to bring in, if you like, a reflation package to try and get the economy going. In other words, she's printing money. So it's hardly surprising that the yen has fallen through that 160 level, and as currently see on the screen, it's 161.53. I think that's going to continue. The problem, I think, is that the Japanese have always had this Keynesian approach, keep stimulating the economy. And after a while, it doesn't work. And the consequence is that debt to GDP, government debt to GDP in Japan, is the order of 240 or 250%. The inflation figures are suppressed, if you like, by intervention by the government because they subsidize many of the components, particularly things like rail transport and so on and so forth. So that's not a true figure. The level of debt which is actually held as a result of continual quantitative easing by the Bank of Japan basically means that the Bank of Japan, under any measure, is completely insolvent. Yet it continues to operate. I mean, in the private sector, if you or I were a director of a company in its position, we would be in jail by now. But this doesn't happen with central banks for the simple reason that they can print their way out of trouble. What's going to happen to the value of the yen? It's obviously going down, and there is absolutely nothing that the government can do to stop it. And it's interesting that at this stage, they feel that a reflationary package is necessary because this is desperation. It really is. And of course, the knock-on effects, we've got to consider this. Japan is the largest exporter of capital into the other G7 nations. By that, I mean that her insurance companies and her pension funds invest in bond markets elsewhere, like some of the European bond markets, certainly America, where they are now the largest holder of US treasuries, and also Britain. As that money retreats back to Japan, which is bound to do for the very simple reason that we're only seeing the beginning of the increase in interest rates in Japan, then we're all going to have a crisis if we haven't fallen over before. It is actually very serious, and you're right, I think, to single out the Japanese situation.
But Alasdair, Japan, might that be a trailblazer to show us where all indebted Western nations are going to go? I think they have 200, you just said it, 230, 240% debt to GDP. Isn't that a situation where the central bank isn't able anymore to increase the interest rates as they would have to do under normal circumstances? I think the game is over. Japan is already repatriating money. They had to sell some US bonds. Obviously, they bought again, but they simply cannot afford to increase the official interest. What happens to the yield is a different story. But don't you think that the central bank, although they increased recently by a small amount, I think 0.2 or so percent, they are simply not able to increase the interest to 5% or more? How should it work?
Yeah, I mean, there's no doubt, Jan, that they're in a huge, great hole. And it's one which they've dug for themselves, and they're just continuing to dig. They will sit on interest rates. They will not raise them as much as really is required. And I think that what you'll see is a very, very steep yield curve, because I think at the long end, I think you'll see bond yields continue to rise. But of course, with Japanese institutions repatriating their funds from abroad, they will be buying long bonds. They, I think, will be under instruction, in effect, from the government to support government finances by that way. But you're going to see bond yields continue to rise from here. It's worth pointing out that back in 1973, in October 73, OPEC raised the price of oil. It slightly more than doubled it. Now, that was the last real crisis we had, if you like, oil crisis. What happened was that all the G7 countries saw a very sharp acceleration in their inflation at the wholesale price level and also at the consumer price level. The thing that's really extraordinary is that in Japan, and you might not believe this, but in Japan, wholesale prices rose by 35% at one stage, and consumer prices by nearly 30%. Now, just imagine what that would do today to Japanese government finances. I mean, it's just horrendous. It's horrid. And I wouldn't say necessarily that you will see inflation running to that sort of level. But surely what we are likely to see, I think, is a collapse in the purchasing power of the yen as it tries to deal with these situations by not raising interest rates, by trying to sit on bond yields. I mean, the consequence is that the yen will go down. But it's not just Japan, because all G7 countries are in exactly the same position, starting really with America, which has created this, is brought forward, if you like, the problem by going to war against Iran and losing it. And just to make absolutely sure that nobody misunderstands it, America has lost that war. They are now on the back foot, and the terms are being dictated by the Iranians. The American public don't understand this because they have been insulated from the reality by government propaganda. How long will it take for Trump and his administration to actually get the popular mandate to deal with the situation which they created? This is not going to be over quickly at all. And if you look at the situation, from the point of view of the dollar, you've got a debt to GDP of about 125%, which, is potentially catastrophic. We are going to see a slump in economic activity as a result of the shutting down of Hormus, which means not just oil, not just gas, but also fertilizers, also sulfur for sulfuric acid, and so on. That all these downstream products, which are going to create, the absence of which are creating shortages around the world, which will drive up manufacturing costs and therefore wholesale prices significantly by the end of this year. So we are going to have a real crisis there. In America so far, I think the American stock market, they think, well, that's all a long way away. It's nothing to do with us. All right, we might not have got it right, but, we're perfectly all right here in New York. They have this view that it's not them, it's somebody else's problem. And it's a huge, huge mistake. I think that's going to bite them. And you will find that the government budget deficit is going to rise very substantially, not just by the fall in tax revenues and the increase in welfare costs, but you will find that the Fed will be in there doing QE like you've never seen before to try and stop the US economy sliding into a slump. Slides into a slump, market crash. I mean, the whole thing starts falling apart. They will do anything they can to try and rescue the economy. They will fail, but they will try. And they will destroy their currency in the process. And that, of course, brings us on to gold, silver. It's not gold and silver going up. It's these currencies going down. They have got real problems, and it's becoming very, very evident.
Alasdair, you just mentioned the 70s, and you wrote an article recently which compared the debt levels of big nations between back then and now. And that is pretty interesting and shows us that we are really played into the corner of these nations. Let me show it. First of all, we see here the 30 years US Treasury yield, and I really agree it's going to go up more. But interesting, this table here below, mid-70s oil shock and 2026 oil shock, although you just mentioned it, we see now some kind of relief, but I don't think that will endure. And now the debt levels back then and now CPI inflation increasing, bond yields. My goodness, if I think about that, there is really no peaceful way out, to say it plain and simple.
Absolutely. The only way out is to destroy the currencies. It's the end of the system. Yeah. I mean, I would draw everybody's attention to the difference in debt to GDP when we had that crisis in the 70s and debt to GDP today. I mean, Germany is it's the only one very much below 100%. It's just, I mean, I don't believe the UK at 94. I mean, I'm talking official figures here. You take into account also off-balance sheet debt, as it were. We're looking at over 100%. But I think the average, cutting through all those, is around about 125%. This is not good. It is very, very bad. And it really means that there is no escape from dealing with a situation where inflation soars to even half the levels that we saw in the 1970s. But I have absolutely no confidence that inflation will stop there. I think inflation is going to be pretty much as bad as it was in the 1970s. And that is the starting point for the destruction of our current currency system. It really is. It really is extremely serious. And, before we started this interview, we were talking off camera. The thing that saddens me is that a great nation like Germany, which is going through its own problems at the moment, but people just don't seem to appreciate just how serious the situation is for the euro. I mean, the euro is going to disappear along with other fiat currencies. I've spent a lot of time looking at what happened in Germany after the First World War. And I have to say that, politics rules the roost. The idea that you're going to have a sensible economist who's going to come along, rather like an Erhard, if you like, and say, right, this is what we're going to do, and this is how we're going to sort it. No chance at all. So I'm afraid your currency is doomed. And to not take action to protect your wealth under these circumstances, I think is very, very regrettable.
You're right. I fully agree. It's not a question of to be or not to be. And as Egon always says, we are at the end of a monetary era. Of course, it stretches over a couple of years. And I think right now we see this nasty correction in the precious metals. We had this incredible run in January, and now people are already frustrated. When will it start increasing again? I can only say we went through those phases again and again. And in my opinion, it's a rare opportunity that people should use before it starts moving up again, because the math, you cannot beat the math, you cannot rule out the math. It simply works. So, and if there is Goldman Sachs just lowering the price target for gold to 4,900, I think I don't care. If you do not have enough already, then use this time now where other people might be forced to sell, like we see it from the US. Don't be drawn into this and capture this opportunity. At least I think this. What's your opinion?
Yeah, no, I'm with you. I think it is very, very difficult for people who have bought gold or bought silver, particularly silver, basically because they think it's going up. They don't necessarily understand why it's going up. There's just some sort of vague view that, if things are getting a bit risky, you should increase your allocation to gold or silver or whatever it might be. What we have, and I've seen this so many times in my 50-odd years in stock markets, is you get corrections in any bull trend. And in those corrections, you'll find that investors have bought at the top and they're shaken out at the bottom. The whole purpose of a correction is to get rid of that excess enthusiasm, if you like, and it provides the platform for a further rise. The difference of this is that we're not actually, I know it seems like this, but we're not actually looking at gold rising or silver rising or falling or whatever, but we're looking at the changes actually in the purchasing power of the currencies. So when you buy gold, what are you doing? You're not actually buying gold, you're selling euros or dollars or whatever it might be. The People's Bank of China famously has been accumulating gold. What's it doing? it's not actually sort of so much accumulating gold, it's getting out of dollars. And when you look at the trade surpluses that China has now, the trade surpluses are hitting records. So it's getting record amounts of foreign currencies. So what does the People's Bank of China do? She sells those foreign currencies. What does she buy instead? Another foreign currency? No. She buys gold and silver. She realizes that gold is money without counterparty risk, without the risk, if you like, of a government turning around in the West and sequestering or preventing her from selling that currency. So she's just getting out. I mean, she's seen what's happened to Russia and understands that. Silver, I think, is a bit different. Silver at the moment is an industrial element. I mean, I know we call it a precious element. It has a monetary role in in a gold-based system, junior to gold, if you like. But that's not why silver ran up from that $50 level, which it broke through last October, and then ran on to 120. No, not at all. It was because there was a squeeze in the market, a squeeze which emanated from industrial demand and China turning round and deciding not to supply silver into the rest of the world at that time. Before then, she'd been happily exporting large quantities of silver to put a cap on the price. That's now fundamentally changed. It changed at the same time as the rare earths situation changed. And now she's importing silver in huge quantities. I mean, we're looking currently around about 2,200 tons, I think, up to the end of May, imported. We don't know what the exports are. That hasn't been reported. But what she's moved from a massive exporter, like typically, sort of 4,000 tons a year, into a massive importer. And guess what? When the price falls, she's in there buying and buying and buying, accumulating it. And the same with gold, incidentally. I think in May, she accumulated something like 163 tons of gold. What are they doing? Are they buying gold and silver? Well, yeah. But actually, what they're doing is they're getting out of G7 currencies because they know they're worthless. The only people who don't are the users of the currencies, and they're always the last to wake up to what's happening.
That's true. China bought a lot of gold. There was a recent headline, you are right, and we should rather stick to those actions the central banks are doing instead of depressed US retail sellers. But let me come to this Iranian situation, because we saw there a kind of market manipulation that is really absolutely unique. How often was there a peace agreement announced 30 and something times and the market popped up, then something else happened and it didn't materialize, but now the market is up at 52,000, the Dow Jones. And isn't that a really crazy market manipulation while we are dancing at a volcano? And you will have heard Trump saying that we are on the brink of a major economic depression if oil remains high or goes even higher. Now they suppressed it while depleting the strategic petroleum reserve. I think this can only explode. Use this time while oil is cheap to fill up your tanks and load precious metals, while the majority of investors is playing with AI stocks and going insane after companies with ridiculous valuations, SpaceX included. That's 2000, the year 2000 on steroids. At least I think so.
Yeah, absolutely. The market manipulation is really disgraceful. I mean, there's no other word for it. I mean, in our countries, I think anyone doing that would be in jail, but obviously not in America. I'm not saying who's done it, but I think we can point our fingers quite clearly towards the White House, where the information, the inside information about, how the situation progressed on a moment-to-moment basis was available. I mean, it's bad. And I think the idea that this problem is now sort of, we can say it's over because the tides are talking and all the rest of it. Well, they're not actually talking. There's a little bit going on, I think, but with the intermediaries. I mean, particularly Qatar and Pakistan have been working together to try and get this thing working. But after President Trump, as J.D. Vance was sitting down with the Iranians in Switzerland, said, if they don't agree to this, agree to that, we'll bomb the hell out of them, sort of stuff. And at that threat, as I understand it, the Iranians walked out, and that was it. And they closed the Strait of Hormuz at that point. Now, the Americans have been trying to retrieve the situation. Like they've gone ahead with moving $12 billion of Iran's money, freeing that, for example. They've been trying to, if you like, sort of go easy on the less contentious points. They've also tried to lean on Israel not to bomb southern Lebanon, but you're not going to get Israel withdrawing from southern Lebanon. And that is one of the red lines which Iran has imposed. This is going to go on and on and on. And come the midterms, I think that this is going to create great damage for President Trump, not least because by then I expect that the American public will be more aware of the fallacies that have come out of the White House about this war. And I think the other thing is that, one reason why the markets just don't seem to reflect the increased dangers to the dollar, the increased dangers to the economy, all the things we have been discussing and are quite easy to see, is because they're living in a parallel world. All the propaganda, if you like, persuades them there isn't really a problem. Oil fluctuates, but, it'll go down. Hold on. The only reason it's where it is because America has been draining her strategic reserves. People will wake up to this one. And when they wake up, two things will happen. The first thing that'll happen, I think, is that markets will begin to reflect a lot more what's going on in this Gulf situation in terms of commodity prices in particular, and I would include gold and silver in this. And also, I think the second thing is that with people waking up to what's going on, the equity bubble, the financial bubble in markets, I think that will start imploding. And markets relative to bonds, equities relative to bonds, by my calculations, are more expensive than they have been since the financialization of the Western economic system, dating back to the mid-1980s. And I expect also that, I haven't got the figures to back this up, but I think that the situation also is more extreme than the Roaring Twenties, the run-up to the crash in 1929. If you look at the level of leverage in the US stock market, brokers' loans, according to FINRA, are standing at $1.2 trillion. Now that is up. This is record highs. That is up from around about 250 billion. So 5 times that sort of level from 2008, 2009. If you look at hedge funds, which are not included in this because they go into wholesale money markets and they also go to the banks, hedge funds have a further 7 trillion of leverage in the market. Most of that is through the repo market. But just imagine what happens when stocks start falling. The banks will sell. They will sell collateral. Collateral will be dumped into the market on a falling market. Foreigners own 22 trillion of US stocks, according to the US Treasury figures. What's their position going to be? The only reason you hold investments in a foreign market is because you're speculating that they're going to go up. I know we talk about diversification and all the rest of it, but let's be clear about this. The reason you invest in a foreign market is because you think the shares are going to go up. It's exactly as simple as that. So when it starts going down, you go, you leave it, you get the hell out of it. So there is going to be massive selling, I think, massive liquidation, attempted liquidation.
But to come back to the 20s, you are completely right. We are now in a much worse situation than back then, not only with relation to the debt levels. I think the Iran crisis will resume, it will come back. Politicians, when they are put into a corner and the Western nations are all into a corner, Japan leading the pack, of course, they use a scapegoat, and history tells us they go to war if they have no other choice is the wrong wording, but they use it. I think that will happen, and therefore I expect the energy prices to increase. And if energy is expensive, of course, we know it's needed for the economy. Everything else will become more and more expensive. The deal that the US made, clearly a loss for them, and at what costs? We have different numbers from 40 to 600 billion US dollar for this deal. I saw this morning they need another 80 billion for weapons replacement. For what reason? I think to start again in a couple of weeks. Therefore, my suggestion would be fill your tanks, get the precious metals you do not have already, and prepare for the worst, unfortunately.
Unfortunately, I have to agree. I think the 80 billion basically is to replenish the stockpile of weapons. I mean, I know in this country, the level of our ammunition is very, very low. I guess it's the same in Germany. I mean, it's been depleted by this war, proxy war, really, against Russia through Ukraine. And then the Iran situation comes along, and basically everybody's run out of weapons, apart from Iran. Iran has been stockpiling weapons, I suppose, really, since the Shah was deposed, but more particularly since America really destroyed Iraq. I mean, we're talking, 2002, 2003. And ever since then, Iran knew that America would eventually attack her, and she had to prepare for it. And she's spent all that time making sure that she is invincible, as the Americans found out. I mean, don't forget that when President Trump went into this war, he thought it would be over in 3 or 4 days. It was shortly after he had airlifted Maduro, captured him, kidnapped him, airlifted Maduro out of Venezuela in a spectacular Navy SEAL event, if you like. And he thought he could do it again with Iran. I mean, he thought he would just sort of bomb the Ayatollah Khamenei, and they would all stand there and put their hands up. Anyway, history has taught us all a lesson that wasn't going to happen, and it didn't happen. And now, of course, Iran is a major, major power in the Middle East. And the future of Israel is something else. We're not quite sure how that's going to pan out. I think the Israelis are actually terrified about this development because they could be bombed quite easily, and probably will be. I think that's an odds-on likelihood. And what can America do about it? Absolutely nothing. Absolutely nothing. If the Israelis, I mean, I know that the Houthis won't allow any Israeli shipping through the straits at the lower end of the Red Sea. We just have to hope the Houthis don't extend that to other shipping. Otherwise, I mean, that's just going to make things so much worse, so much worse. And as to your point earlier, Jan, about the dangers for Japan imports 90% of her energy. So she's very, very badly affected by this, very badly affected.
You're right, Alasdair, and that was the final statement. I can only encourage our viewers. By the way, we fight for some more people to listen to this and to prepare for many years already. And I think many people did prepare already. So use the time, as long as the gold and silver is as cheap as it is now. At least financially, you are prepared then. But of course, the finances are not everything. You need a lot more to prepare for the events that I at least expect but that's a different topic. For today, Alasdair Macleod, I thank you very much for your first appearance here, and I hope to do this again in the near future. Thank you.
That would be very nice. And can I just say, as a final parting word, when you buy your gold and silver, make sure you've got physical gold and silver, and make sure you've stored it away from the banking system. And just make it as much difficult as possible for your government if you like to get hold of it. And that's why I'm so keen on von Graetz. I mean, that's their business. So that's something I think you ought to bear in mind.
Absolutely. Keep it away from the government. That was a good suggestion. Thank you for today. Have a good day in Britain.
And the banks.
Thank you. Bye-bye.
Thank you very much indeed. Have a good day in Germany. Thank you.
You too.
Bye.
Thank you. Bye.